So the history of insurance and the history of the fire service are actually quite intertwined. Although there is a slight caveat that actually the original insurance was actually for ocean-going transport, but not long after that, with the Great Fire of London of 1666, basically after that massive conflagration, insurance companies were basically founded, and also at the same time, the need to establish organized fire protection was established. And in fact, and this is how they're really intertwined, was actually the original fire brigades were actually organized and paid for and basically worked at the behest of insurers. And it was, frankly, it was actually kind of considered like a bit of a membership benefit, in the sense that if you had a fire in your property, the fire department that was associated with your insurance company would actually would show up. And so, and the way that they kind of figured out who's, like, in a sense, whose fire it was in terms of which fire department would respond, because they were kind of all separate. Because again, we now think of it there being a single fire department covering a community. But in many cases, there were sort of almost competitive fire departments, but they would have something called fire marks, which were typically either metal or some sort of, or potentially like clay, I guess, but some sort of mark on the side of the building that would have like basically a branded logo, and would say this house is protected by, for example, the Sun Insurance Company or what have you. And that way the fire department would know, in a sense, which buildings they're supposed to protect. And so now obviously that's a while ago, 1666. But this whole concept of insurance and the idea that you would have insurance on personal property and or commercial property for that matter, and that there would be a fire department in the community to protect that was actually kind of intertwined. Now, over the years, that's obviously separated, and it was slightly less clear cut that insurance companies and fire departments were associated with each other here in the U.S., but there is some history there. So that's really the kind of how they, in the sense where they started together, and we've all, of course, matured in both industries, but that's really how they come together. Here in the U.S., the relationship between the fire service and the insurance industry really can be tied back to the National Board of Fire Underwriters. They were established kind of in the late 1800s or thereabouts, and they continued up until about the 1960s. And so they actually created something that was referred to as the standard schedule for grading of cities and towns of the United States with reference to their fire defenses and physical conditions, which of course rolls right off the tongue. But this is an idea that they would have, they would send out people to assess basically the fire protection capabilities in a community, and that information would be used by insurance companies to ensure that they were setting their rates appropriately, but also it basically was setting expectations and standards. And so so frankly, now when you think about the late 1800s, at that point, a lot of the fire departments were predominantly using basically horse-drawn apparatus. So basically, they have a team of horses would pull either a big steamer pump is what they refer to it as. And then some communities, the kind of more wealthy communities, were starting to use these newfangled motorized fire apparatus, what we would think of as, a traditional fire truck. And so, and they would basically set expectations in terms of how, where those fire stations should be located, in terms of how much density and that kind of stuff. So that was really kind of sort of where in a sense, how the relationship between the insurance industry and the fire protection industry is kind of changed and moved to. And so, and the kind of, just to wrap up that point, the last thing is that was really focused on measuring basically response capabilities, looking at basically presuming that a fire has occurred or a fire has been called in, how quickly can they summons an appropriate amount of resources, and what type of equipment do they have, what type of training do they have. It's really focused on response. In more recent years, there's been a realization that that really response is kind of a more antiquated way of looking at it. Really, there's a real increasing focus on actually trying to quantify and trying to measure mitigation. And really, and more importantly, how effective is that mitigation? And so that's really where, in a sense, we're having sort of a paradigm shift now, really trying to, obviously it's still very important to be able to measure and ensure that fire resources are appropriately distributed in the community, and they're appropriately trained, and they're appropriately equipped, and all this kind of stuff. But missing from that equation for a really long time has been a focus on mitigation. And that's really where the industry is going. And so that's really, as the industry moves forward, that's really going to be the next focus. Sure. So as I kind of noted, there is basically the fire industry and the insurance industry share what we might think of as an origin story, the same origin story. But in a sense, we've also kind of grown apart. The fire protection field has matured dramatically, and there's a lot more expertise and knowledge and technology that is being used. And so at the same time, the insurance industry has become dramatically more mature as well. And in a sense, we've sort of grown together. And a part of this is also that, and I might almost say we're actually a victim of our own success, in the sense that we have actually done a really good job of starting to prevent fires. Since the 1980s, there was a dramatic reduction in the number of fires across the country. However, it sort of flatlined in the US. We had a real precipitous drop in the number of fires from 1980 to about the year 2000. And it's sort of flatlined since then. In fact, actually now in some ways, even the rates of fire injuries, for example, as one measure of fire severity, but actually the rates of injuries in many cases have actually gone up in recent years. And so it's really an important opportunity to basically reestablish that original relationship. Obviously, insurance companies have a tremendous amount of other concerns and other perils that are kind of taking their attention. I mean, every day we're hearing about a new type of peril or a new product or concern that is coming up, and so really, like, it's sort of in a sense distracted us from the original peril. Peril was often referred to as peril A, but I think there's a really important opportunity to kind of come full circle and to actually re-examine some of our previous assumptions about why fires occur, and more importantly, what we can do about them. And so really that comes back to this earlier point I made about really focusing on prevention and mitigation. And so that's really where a lot of effort has been put into trying to understand differences in terms of how mitigation is utilized and is embraced in communities. And more importantly, also, how do we actually, in a sense, incentivize communities and property owners and insureds to take a more proactive approach to mitigation. We're seeing this pretty significantly in the wildfire arena, and particularly out in places like California right now, where there's a really significant concern and kind of public outcry around how significant wildfire losses have become. And it's really just highlighted that we need to start taking a new approach to this. And so what I often think about is, to put more of an insurance terminology speak on it, is that in the highly protected risk arena, so you think about for those insurers that protect or that insure large factories and other industrial facilities, they take a really proactive approach to fire prevention and fire mitigation, because it's really in their economic interest to do so. And so they have whole teams of people who go out and do inspections and other evaluations to ensure that those properties that they are insuring are complying with best practices across the industry, and they're complying with codes and other standards that they were to try to minimize the likelihood of having a fire loss. the challenge is in the other, in more traditional lines of insurance, we don't tend to take that same kind of proactive approach or kind of focus on mitigation. And so there's a real opportunity, I think, in terms of, and I would even say, actually, we should start thinking about communities as highly protected risks. And so by better coordinating between local fire departments and insurers, I think there's a real opportunity for us to start realizing, again, where are they doing good mitigation and effective mitigation, and where aren't they? Because again, those are where we need to be. Those are the risks that many insurers are probably going to want to take, those places that are taking this seriously and are less likely to have a loss. Well, in many cases, I think there's about 9 states or thereabouts that are the insurance regulator, the insurance commissioner is actually codified as a state fire marshal. And so, in those states, it's very obvious the relationship between insurance regulation and fire loss. But perhaps it's more important to actually look at, as I mentioned about the wildfire peril. What we're really seeing is that obviously the focus of the regulator is to ensure the availability and affordability of insurance, and really to be the consumer advocate. And so we're starting to see in California, particularly around the significant number of wildfire losses that have occurred in recent years, that really we're being threatened in a sense on all sides of that. And there's a lot of concern among carriers, among insureds, and among the regulators. And so we're trying. So there's been a big effort to try to figure out, how do we address this issue? Because there are folks that are struggling to get insurance in the admitted market, and frankly, some of the people are struggling to get insurance at all. And so, so, for example, again, sticking with California, Commissioner Lara has, and frankly, the whole DOI have really taken aggressive effort to try to basically bring the insurance community and the fire protection industry together to try to jointly address this issue, because we've taken a much more of a patchwork approach historically, and it's using that old saying, like, the left hand doesn't really know what the right hand is doing. It's, I would say in California around the wildfire peril, that's often been the case, and among that don't necessarily know where all the wildfire mitigation is occurring. We don't necessarily know where communities are adopting wildfire mitigation efforts and programs. And so there's been a big effort to try to kind of join up the thinking around there. And so that's really where I think probably best illustration of where the importance of the role of the regulator, and frankly, regulation more broadly, and reducing fire loss comes from. Closely related to regulation is standardization. And so, as I mentioned, historically, the approach to wildfire across the West has been relatively kind of a bit of a patchwork quilt. And so, and that, I mean, it's all important efforts, and there's lots of great progress that has been made. But again, it's been done in some, not necessarily, I wouldn't want to suggest in a haphazard way, but it's not necessarily always the most coordinated way. And more importantly, some of the key stakeholders, namely insurance companies, don't necessarily know where mitigation is occurring, and we can't. Then it makes it really difficult in many cases to be able to say how effective those mitigation efforts are. And so, the role of an advisory organization. I think there's a real opportunity to try to standardize this information and make it more widely available, and to help insurers avoid having to duplicate effort, and to frankly help work on behalf of the insurance companies to make sure that we're kind of coordinated. Because if we don't have a standardized approach, and if we don't have standardized information, if we don't have standardized data, it really becomes hard to make these important decisions that carriers and underwriters and others are being asked to make every day.